How can we differentiate a sweep versus a run on liquidity? That is what I'm going to go over right here, right now in this video. So, let's get right into it. We can clearly see that we came and we swept this liquidity pool. Let's dissect how we actually moved into it and out of it. Looking here at the 1 hour time frame, we can see that we had clear displacement up into the liquidity pool and we had clear displacement out of the liquidity pool. This is exactly what should happen at a sweep. This fair value gap in to the liquidity pool is what will tell you if it's a sweep or a run. Because here, as we can see, we displaced in. If it's a sweep, we should disrespect the fair value gap in. Why am I using the 1 hour time frame for this? Because this liquidity pool is a daily swing high. It's a daily swing high. So in that case, I'm going to use 2 time frames below, not the 4 hour, but the 1 hour. So I'm going to look for my sweep signs, my fair value gaps in and fair value gaps out. So, as I mentioned, the sweep should have the fair value gap in on 2 time frames below. So if it's a daily swing high, we should use the 1 hour. If it's a weekly swing high, we should use the 4 hour. If it's a monthly swing low, we should use the daily, etc. So, when we ran through this fair value gap, we disrespected it and created a bearish fair value gap. That to me indicated that this was indeed a sweep and our target is this swing low. Also, why am I using this swing low as the opposing liquidity target and not, for example, this swing low or this swing low? Well, the answer is pretty simple. We mentioned that this was a daily swing high. So if we go into the daily, where is the closest opposing swing point? Yes, this was the first liquidity pool and you could have used that as your target. But also, this was the most significant swing low. That's what I was using that as the target. And also, we can use the sweep versus run process here as well. Because what did we go over? Let's remove this. This was the first daily swing low that price encountered after sweeping this daily swing high. So what should we do if this was a sweep? We have the bearish fair value gap into the daily swing low. That's the first step. But what did I also mention? That this fair value gap in will tell us a lot about if it's a sweep or a run. Because if it was a sweep, what should happen? We should disrespect that fair value gap with a new bullish fair value gap to then continue higher. But in this case, we actually respected the fair value gap and kept pushing lower. That is the clearest sign of a run on liquidity that you can get. So, we can see that here as well. This daily swing low. What did we do? Again, clearing up the charts a little bit. We had the displacement in. But what did we do here again? We came into it. We did not push higher with a new fair value gap, with a new bullish fair value gap. But instead, we respected the fair value gap and kept pushing lower. This indicates a clear run on liquidity. And what can we target? When we have this low and we start retracing into this 4 hour fair value gap right here, we can then target this liquidity, which we eventually, after some struggles, reached. So, hope this was valuable for at least some of you, because this is something I wish I had been taught a lot earlier in my journey so far.